Hit it.
It's February 21st, 2020, episode 68. I'm Patrick Ceresna.
And I'm Kevin Muir. This week we welcome Todd Bubba Horwitz, a local of 3 different Chicago exchanges for the past 4 decades. Bubba shares the secret of his success along with some great stories of days gone by on the CBOE during the 1987 crash. Then we have my favorite segment, Talking Charts with Patrick.
And this week in trading history, we're going to go back to the 1500s for a story about Charles V, as well as we're going to end with a WTF video of Kev's ode to succession. And then we do the top 3 things to watch next week.
Joining us now is Todd Bubba Horwitz. We were chatting kind of a little bit offline and getting a little know Todd, and he had so many great stories. We just decided to stop talking to him and just start rolling the tape. So, Todd, it's a pleasure having you on the show.
Hey, what's up? It's great to be with you guys. This is going to be fun. I'm looking for this. So we have a good time.
Okay, so you got to start with how you got onto the floor, because you started the story and I started chuckling, and I just told you to stop because I wanted to hear the whole thing live.
Well, I was a good student. I mean, I had a good average. I had a good grade point average, but I never went to school. And I just decided that I wanted to make more money than working at a part-time job. So I actually got interviewed and hired to be a salesman at Pitney Bowes, which in those days was the postage meter company. And I excelled there pretty well. And I was there for about 3.5 years. And I was teaching everybody. I was the number 1 salesman in the district, and so on and so forth. And I said, "What about a promotion?" They said, "Well, you're too young. You know, in 1979, they can tell you were too young, right? Because there was no lawsuits then." So I said,
right.
I said, "I'm too young. Here's everything." I threw it at him and I walked out and I quit. Okay.
And this is just out of high school, right? Like it wasn't like you were.
I would have been. You know, I was approaching 21. Like 3.5 years I was there. So I then walked out. And so what am I going to do? Well, I always knew that I wanted to go down to the trading floor. I mean, I didn't trade much, but I knew I wanted to go down there. I knew a bunch of guys down there. So I said, so I went down and got the information. Okay. And when in those days, you needed not just money, you had to have a clearing firm that would be willing to take the risk behind you. Right. Because again, when we were on the trading floor in the 80s, nobody knew what the hell you were doing. Okay. You could have took down the whole exchange with one trade if you wanted to. They would have never known, right? So you had to have a firm that would back your trades. So again, I found my firm. We got involved. We got in bed together, and so I started trading. And of course, it's a tough world down there. You know, especially if you don't know what's going on, and you do your best to try to learn. You do all these little things. So in the meantime, the first 6 months, I made my living playing backgammon and gin.
What, with the other traders from the floor?
Yeah, oh yeah. We used to play every morning. I mean, we used to play all the time anyways, but I had to do it to eat. So,
okay. So what floor was that? Where did you walk on? Which exchange was it?
I walked on the Chicago Board of Options Exchange. Okay.
Right. Okay.
I walked into it when it was still the old floor. It used to be in the Board of Trade building before they built their own building. Okay. So now, you know, I'm trading and I'm trying to learn. And in the meantime, I'm trading Superior Oil. Remember T. Boone Pickens?
Yeah, for sure.
Yeah.
Well, you know, he was a big takeover guy, right? He kept taking over companies. So I was in there trying to, you know, scalp a living out. And right behind me was the OEX pit, which I didn't know what it was at the time, but it was a pit that the people were like clamoring to get in, right? Okay. Right. So I got to check that out. So eventually it was an upgrade in seat, but I did that. But the story, I got a story for out of Superior Oil. You know, I used to love to do a lot of ratio stuff. Okay. You know, stock against, because, you know, when you're a market maker, you can short stock easily and you get paid the interest on it. So it was part of the trade. And I got a big, huge position on in Superior, pretty neutral, but, you know, I was going away for the weekend. So I go to the barbershop, get a haircut, get a manicure, and I'm watching. In those days, they didn't have CNBC or Fox. Everything was 20-minute delay. On a crawler, you can hardly see. Okay. So the next thing I see is I go, Superior Oil halted, news pending. My haircut's half done. My nails are half done. I said, I got to go. I walked out, drove back downtown. Okay. Half a haircut. And I'm figuring, I'm calculating out if it goes here, what am I going to make? What's going to happen? And I said, this is the one price it can't open up. And sure, it reopened up back at the exact price I didn't want it to open up at. But hey, that's life in the city.
That's hilarious. So you see the OEX behind you, and you decide that you're going to go to what back then was the biggest kind of stock index pit in the world, right?
Well, yeah, it was. And then when they built the new floor, okay, which the CBOE built their own floor, I forget what year it was, but let's say 82 or 83. And then that there was like over 2,000 traders in there at one time. Okay.
Holy smokes! I had no idea. For those who don't know, the OEX is actually the S&P 100.
Correct.
And the reason the people traded it was because back then it was difficult to trade 500 stocks because the electronics wasn't as good. So the liquidity was centered in the 100 because it was easier to kind of hedge that. So that's what it ended up being more popular.
Correct. Good analysis. So anyway, this place was like a zoo. I mean, it was, the biggest thing that market makers need, it's not really necessarily price direction. It's really order flow, right? Because if you're a true market maker and you're making a market, before they got into this silly decimal crap, okay, when you're at fractions to deal with, you can make a living because at fractions, the smallest move was a 16th of a dollar. You do a 10 lot at a 60, you make a 16th at $62, right? But at the end, if you understood where options were priced, okay, the key number used to be $3 as the first price point because when they went down, they only went down a 16th. When they went up an eighth. So that's where you want to try to hang because you sit there and make a market. So really, all you're doing is facilitating order flow back and forth. In the meantime, you're picking up whatever you can in between. And of course, every time you get once in a while, you take a shot and get run over. But that's what true market making is. But of course, that developed into a lot more. But the OEX was just a great pit that was loaded with paper. In fact, I think the OEX was the first pit to get any type of electronic trading back in the 80s. Okay.
Right. So you started off making your living doing gin and backgammon. How long before you were making, you could give those up and just do those for fun and actually make a living trading?
Well, I mean, that took about 6-7 months. I started to make some money, and then I made more money, and then then I got into the OEX, and then it was really off to the races. And of course, I still played gin and backgammon for money, so it was still good. It was still extra spending money enough. But, we had we had some great times, and it was a very active pit, and I could not talk if this were back in the old days, and you were trying to talk to me now, you couldn't hear me because I couldn't. By the end of a day, you'd have no voice left. Okay, I mean that's how crazy it would get, especially on a wild, crazy day. You had to because you're screaming above everybody else and trying to use hand signals, plus the fact that you're trying to check trades to make sure you don't have a mistake because there's a thing in this business called out trades when you're a floor trader, and a guy you think you're doing a buy versus a buy versus a buy versus a buy versus sell, and all of a sudden once in a while that becomes a big problem because you both can get beat, one you can get beat, or a guy decides to take a shot at you. There's a whole bunch of things that go on, but you got to make sure you were checking your trades, and of course every day you'd have to be in early to check your out trades because they're going to happen. So. But it was a wild days, and you had, like I said, no voice. I mean, even today, if I'm talking too much, I start cracking my voice anyways because it's still a little bit damaged after, I mean, I'd say only 25 years are really young because once it started to get slow down, it was all pretty much electronic. When I decided to get off the floor, when the S&P pit, the S&P used to be a $500 tick, now it's $250, right? And now the mini's 50. Well, it used to be 500. Okay. And so when they went to 250 and then they put the minis in, you had all these little guys running around with computers on their shoulders. I'm not going to wear a computer. If I'm going to do it, I'll stay home. I don't need to come down here and try to scalp out 12 cents. I'll do it from home. So I did it from an office for a while, and then I'm still in an office.
So you had made the transition from the OEX to the S&P 500. Was that just because as the OEX became less popular and the people started trading the S&Ps more, like the big ones, is that you kind of went along with the flow?
I just want, I trade. Listen, in my day, I've traded everything. Okay. I've traded on almost every pit in my day. Okay. Even the weather, by the way. But the futures were a little faster and a little bit bigger tick, and you weren't grinding so much, so you took a chance and traded in there. And again, I trade currencies, and then of course I went to the board of trade. But I did start. I was one of the first market makers in what we now know as the SPX in 1982. Okay, that was
right.
There was 5 of us who started that pit. It was a joint venture between the board of trade and the and the CBOE. So that's how that product was born. And every new product is born with market makers that are willing to go in and make a market. So that's kind of what we did as we started making the market. Now, obviously, you see what it is today. Now it's a monster pit. It's a very much used product.
Okay, so you were there during the 1987 crash. What pit were you in at that time?
OEX. I got a picture of it. I got it right on my desk. Stand there. It was a very eerie day. Okay, it was the panic and the reeking of people of the retail trade was unbelievable, because there were people, okay, that were paying more for puts than if the index went to zero. Okay. A true story. Okay, those guys all got sued and sold, but I wouldn't sell them because I knew better. But they eventually got sued and the people won their money back. But again, that was how crazy it was. People didn't care. It was just get me out. And of course, that's always an automatic sign. You know, we used to have a saying on the floor: when you can see a guy's tonsils, to give him whatever he wants, he's wrong. And that's always a sign.
So they were buying puts at more than the actual below zero. Like you'd have to exercise them for a negative for them to work out.
Correct. Exactly right. So
because nobody was willing to sell them.
So Todd, I want to ask you, when looking at 2008 and the crash in 2008, and you compare it to 1987, what were the distinct differences between the two? Like, was 87 in your mind like still something that stands alone, or was it really a similar feeling during both periods?
There'll never be another 1987 because. The first thing, remember, 1987, there wasn't as much overnight trading. Okay, there wasn't. I don't remember if they had started trading the S&Ps overnight. You know, they were the first to go. So that was number one. Number two, there was the markets were still young for most people, and they didn't comprehend what was going on in the markets. And of course, you get a 30% hack. And all of a sudden, it becomes serious business. There were no circuit breakers in those days. Right. So the free fall was on, which is why even the market makers were stunned looking around. I mean, it was like, believe it or not, in 1987, it was that whole week. It was as quiet as if nobody was there, and it was packed, but it was so quiet, nobody would speak, and you just waited. And of course, markets were wide, and you could make some good dough. But again, it was a very challenging thing. 08 was, 08 was a fairly good trading season. You know, remember 87 was in one day. Okay. 08 was, they had 1,000-point updates back then, if you remember, and I actually, this is another good story for you. I was going in for surgery. Okay. And I was short, and I said to myself, well, let's see, I'm short. The market's up 1,000. Do I want to cover? Or do I want to? Maybe I'll pass out and never wake up again. So I chose not, and the market opened. By the time I woke up, the market was down. Okay, so those were very volatile times. You know, that spike in the late October of 08 was huge in volatility. So that was that. Anytime there's volatility, guys who know how to trade, guys who like to trade, love it. I mean, this little piddly volatility they talk about now at 15% or 18%. I mean, we traded, it was average daily was at 30%. So,
right. So Todd, I just got to laugh. Even a surgery doesn't shake you off your positions.
No, I don't. Look, I listen. You're dressed for the party. Anything something happens, it happens. You know, what are you going to do? Yeah. You got to be able to step up a little bit. You know. I mean,
when you told that story, you said, "Oh, you know what? Maybe I won't wake up. It won't matter." It's kind of like the guy JFK when they talked about the Cuban Missile Crisis, and everyone was selling, and he decided to go home long that Friday. He says, "You know, if it ends up being the wrong call, it's not going to matter anyway." So it's kind of the same with you.
100%. I mean, again, that you're 100% correct, because what happens is, look, if we understand the dynamics of markets in general. Okay, which is the average yearly gain for 107 years is 8%. Okay, so if you understand that first, they're not going to zero. Okay, there may be companies that go to zero, but certainly indexes aren't going to zero, right? So you can be much more comfortable being long or short indexes because you don't have to worry about a trading halt because of news. You don't have to worry about any funny business about the boss hanging out with the secretary and getting sued. And none of that stuff comes into play when you're trading an index. So it's much easier to, I mean, you may not be right, but it's easier to hold a position because there's no rumors around the actual index, right? Stocks, there's always rumors. They get crazy, they go up, they go down. So that was always an issue, which made it easier to stomach some of these index funds versus stocks. I mean, I didn't care either way, but at the point, you want to make sure, because you always got to know at worst how you getting out. Well, in the index, I know I can always get out. Okay, in the stock, I'm not always sure, right? I mean, if they collapse it, I mean, here's one more for you. Okay, and I'm taking my wife, my kids to away to ski in Lake Tahoe. Okay, and I had some big ugly stock. It was a shot. I mean, don't get me wrong, it wasn't like it was my entire holdings, but it was I forget what it was, but it was a pharma stock, and I was going to sell half of it because I had a huge profit in it. And the buddy that gave it, he said, no, he says something big's going to happen. I said, okay, okay, I'll take a shot. And of course, I get to the airport, okay, and I call my clerk, that stock had halted trading, okay. By the time I landed in Lake Tahoe, it was shut out. It was out of business. it was about 60,000 shares of air. So
wow.
That's got to sting. So you touched upon the fact that it used to be a lot more volatile. And one of the things that a lot of traders are kind of struggling with is the idea of HFT and all this gamma trading, gamma selling, and the central bank put and all this crap, making it so this grind higher in the stock market is causing it more difficult for those kind of old school traders that were used to that volatility. Do you think that this is a permanent fixture, or do you suspect that we're going to, before we know it, we're going to get some selling again and some moves, and we'll be back to the good old days?
No, I think the good old days are over. Okay, those kind of days are over because between the circuit breakers, between the 24-hour trading, which is much more liquid now, what used to happen. You got to remember, a normal Friday, if this market didn't open Sunday night this weekend, okay, on a Friday like today, this market might have gone down 1,000 points, okay, but because you're not as under so much pressure because they're still trading now, and they'll trade. The S&Ps will be trading for another 20 minutes or so. Okay, so they're going to trade. So you got a chance. You don't have to panic. So what's going to happen? What used to happen when people didn't have control of them themselves is they'd get home on Friday and be all nervous, and by Sunday night they wanted to jump out of a building. Okay, so Monday morning everybody was lined up at their broker because they couldn't get to get out because you had to call. Then you didn't have a machine. So now, all that stuff has been changed. And by the way, okay, the high frequency trading is not computer trading. Okay, just so everybody's clear, high frequency trading is built by who? It's built by the retail client is the high frequency trader. Okay, because if you think that they're not all pushing the sell button at the same time when they start to panic, think again. You've got hundreds of thousands of people with an iPhone or with a computer or whatever that see the same thing, and they all panic at the same time. They hear coronavirus and they try to sell the news. When you sell the news, you almost automatically lose.
Right. So what do you? So we're taping this Friday night, and it was an ugly close. What do you think is going to happen Monday? Is this the start of the correction that a lot of people of the bears have been hoping for, or is this just another buy on the dip?
I don't know if it's a buy on the dip, but I don't like to predict. I mean, I'm long, so let's put it that way. Okay. I use algorithms. I have some portfolio more algorithms I use, but I mean, I'm long, but I mean, I'd like to be a little bit short coming in Monday. I mean, I take a chance to come in short Monday, which I bought some stuff just in case. But I mean, I think that the market's not going to end like this. I don't believe. I think the way it ends, in my opinion, okay, will be a spike up day, on something which will finally create what we'll call the final blow off of the market. I don't think it's here yet. I mean, it could be, but again, I wouldn't expect it. I think that's what everybody's expecting. But again, if you got to go back to the simple metrics which you kind of mentioned, is the money is so cheap. Remember, it's not guys on the floor street borrowing money to buy 100 shares. You got guys that know that they can grind out X amount. They'll borrow as much as they can. All these big companies. So that money is so inexpensive. Plus the fact Okay, let's say it's really bad news. Where in the world, if anybody wants to get yield, I'm not saying I condone it, but if anybody wants to get yield, where are they going to go? Anywhere in the world. Pick your poison. There's nowhere. You want to go for negative rates in Europe? You want to go? You want to go outside? You want to try to go to China? I mean, look. At the end of the day, the money has to come and flow through here, which is why you see such a big rally in the dollar.
Right. And so do you think it's going to end like the 1980 kind of gold bull market where you get that spike higher that was like 20, 30% in very short order, and then by the kind of a week later was down and had given it up? Is that what you're looking for? An emotional kind of...
That's what I would expect today. I mean, right now, the way I see it, until this market breaks, I mean, again, we can talk about ugly days, but in the meantime, we're still, 2% from all-time highs or whatever it is? I mean, again, it's ridiculous to worry today about the market collapsing, and I think that's another big fallacy today. Is markets are far too efficient now to take a shot. They don't get too sloppy. They don't get too far out of line because again, you've got too many people watching it and too many traders trading it. So it's hard I know again we'll have a major sell-off. I mean, I would not be surprised if someday we have another 50% haircut. Okay. I mean, again, I've got a target in my mind in the S&P that I've been looking for 4 years. Okay. And it's nowhere close. It would take a 50% to get close to that. So I think there's one coming because there's always one coming, right? I mean, you go back in history, there's going to be a meltdown at some point, and we don't know what the reason's going to be. The beauty is you don't know what the reason's going to be. It's going to be some black swan event that creates the selling buzz. And instead of buying the dip, all the people are buying the dip, but when they buy the dip, okay, it won't bounce. Okay. And they'll be like the Duke brothers in Trading Places. That can't be right. Well, that's what's going to happen. It always happens. And as long as human beings are trading, it's going to continue to happen just like that.
All right. Well, do you trade any of the other markets? You watch currencies or?
I trade everything. If it moves, I'll trade it. If it's liquid, I'll trade it. Again, to me,
I like it. You're my kind of guy.
a chart is a chart. It doesn't matter. Okay, they're all charts are the same. Okay, all patterns repeat themselves.
What's your take on what we're seeing here in like the Japanese yen and a couple of these others that are making these really big moves here in the last few days?
Well, I think the euro's going to zero. Okay, I mean, again, I think it's going back to where it was in. Way back in the day when it first came out, went to 88 cents way back then. Okay. Right. I think it's going back at best for the euro to par. Okay. The yen, I have a position I'm short. I don't follow it as closely. I don't trade that as actively as other things. I mean, it's not, there's other things to me that are better to trade. So I spend a lot of my time trading the euro, but I do have a position in the yen, which is short. And obviously that means I think it's going a little bit lower, but I do think it's going lower. Again, the U.S. dollar is so strong right now, for a number of reasons. One of them is it's a fear asset. Okay. Everybody forgets, the U.S. dollar is a fear asset between the bonds, the dollar and the VIX. That's where that's where you read fear. I mean, it's not just the VIX because the VIX is really only measuring the numbers of puts being bought to open versus sold to open. So, again, you see real fear when the big money is floating into the U.S. dollar and they're going to push it over par, I think, in the next couple of days.
Right. And what's your take on the way that the commodity markets have been trading here since the start of the year? Obviously, the coronavirus and a global economic slowdown has been the kind of storyline. But is this oil market in your mind completely oversold?
I think it's going to bounce, but I'm short oil and have been short. In fact, I actually called the top, both tops that happened recently. Not that I'm bragging, they were both blow off tops, and it was pretty easy to get short up there. And I figured it would bounce. I said, and I have a tape, so no, I'm just kidding. It would get under 50, okay, and then it should probably bounce. And 54 is what my target was. That's right where we've hovered the last 2 days, okay. And now we're down at 53.34 or so. So again, I think that it's probably going back to 50. My guess is it churns back and forth here before it makes its next decision. I believe the next decision is still down, but I wouldn't fall off my chair if it went higher from here. But I do think that this 50 to 54 is a pretty key level that it's going to vacillate. You know, we had a pretty nice pop. You know, you had a 25% down or 23% down, and then you have a 6 or 8% high rise. Yeah, that's pretty natural in a bear market, right? It is in a bear market, so we'll see.
So, Todd, it's Kevin here again. One of the things is you've obviously traded your own account a long time, and not only that, you've watched a lot of other traders. What do you think is the thing that most people get wrong and get, cause them to not succeed in this business?
The number one thing is they get emotional. That's the first thing. Before anything else, you have to have control of your emotions. You know, when I said it earlier about, you see a guy, you can see his tonsils, he's wrong. That's what people, you may not see it because you're not, they're in a room by themselves, whatever. But at the end of the day, if you cannot control your emotions, you can't win. You can't make money. You can make money occasionally, but you have too many volatile swings. The second part is discipline. Look, I text to my guys all the time. I have some members that subscribe to me, but I go, hey, look, at the end of the month, every text, know your exit. I don't care what you do. Know where you're getting out. Okay. I don't care about getting in. I care about how you're getting out and how you're going to protect yourself. Okay. And another thing I teach is no naked options. I'm not a naked guy, and I did it myself. I didn't want to sell nakeds either. What do I need to get involved with that for when I can create almost the same exact position and not be naked? You know what I mean? So I look at it and say, those are things, because we know what happens every day, right? Money gets in the way. And if they start to see a drawdown, they all get nervous. Everybody wants to jump out of a building. They see a drawdown on their account. Well, look, drawdowns are part of this business every day. You just have to be able to, understand what your own personal win rate is, okay, and how you trade. Because if you trade consistently, you should be able to calculate how many trades you win out of 10 or out of 100. Doesn't matter. Okay, figure out a percentage, okay? Because then if you know that you hit 66%, okay, so when you see a losing streak, look for an opportunity to press up on another trade when it comes back. Right. When the market changes to the other side, look for a reason to add a little bit more to your position. People don't do that. The average guy is quick to take profits and slow to take losses. It doesn't work out well, though. It's got to be the other way around. You got to let your profits run and get rid of your losses quickly, because typically a weak piece of crap's a weak piece of crap.
One of the things I've noticed as well is you're not shy to take the other side and fade kind of consensus views, but yet you're saying at the same time that you're not selling naked options. Is that just naked options, or do you always try to find ways even when you're fading like the crude oil rally to kind of protect yourself, like on the other side? Are you long? Like if you were to get short the crude oil, would you go and buy a call to protect yourself, or would it just be with a stop?
No, I wouldn't do a style. I'm short. I'm actually short the future. Okay. And if I wanted to cover up the top of it, okay, I would buy a call. Okay. If I wanted to make it even more neutral, I could buy two calls, right? I mean, when I first started that, you didn't have put options. They just started with put options. You didn't know how to create a synthetic put. So that was, buy a call and sell the stock that is a synthetic. So in the meantime, but usually if I'm going to see that, I'm going to just reverse it out. Okay. I don't really want to pay the premium in that case. I mean, I pay premium. I do a lot of hedging. Okay. That's one of my key things, which is why, my long-term portfolio, I never sell. All right. I hardly ever look at it because again, it's hedged, it runs automatically. And I do sell options there, but I don't sell them naked. I use ratio spreads that cover it up and automatically buy more stock on the way down. Okay. At a certain percentage and never get out. And then of course, I sell iron condors against that position. I sell spreads, but again, I give you the perfect example. If you were a short seller of naked options, you want to sell the spiders. Okay. Well, you can sell the spider naked put if you want. I mean, it doesn't matter either side, but sell the naked. Okay. Or you can sell the spread and go about 20 points out. You're giving up about a penny or 2 pennies. Okay. On the credit. But at the end of the day, what do you end up with? Well, you end up with, first of all, instead of having $30,000 margin for one lot, you got $2,000 margin per one lot. Think about it. So now I'm not exposed. I've got no margin issue. And it doesn't matter. If the market goes to zero tomorrow, I don't have to worry about it. I know where I'm out at. Okay. So I'd rather leverage up what I see than put myself naked and eat up all that margin for nothing, because you're eating up a lot of crap when you sell nakeds. Okay. And if I'm going to sell negatives, I start always sell at the money. I want the big juice. I mean, I'm taking a position based on it. But if I want to do that, if there's a future involved, obviously the future is the purest market there is, right? It's the only really true price discovery market that's not affected by anything. So that's what I like. Listen, I like options. I was an options trader, obviously, and I still carry positions. But options themselves, I mean, if I'm going to trade actively during the day, I don't trade options actively. You'll never come out trying to trade options actively. The bid offer spread's too big. It's too hard. I mean, again, I could do it, but why should I when I can go right to the future? I mean, one future equals 500 shares of the spiders. So, why would I want to trade the spiders when I can trade the future just as easily? It's faster. It's more liquid. I don't have to wait. I don't have to worry about implied volatility. I don't have to worry about anything. In and out.
So obviously we're talking about all these broader markets, and obviously I love options, and you're spot on in terms of the margin. But I wanted to just get back to some of your market views. I mean, right now, are there any market themes that you have that are out of consensus with what everybody is sort of thinking in the markets? Like, it seems like there's some prevailing trends that are so dominant. Is there something that you just have a different market theme that's out of consensus?
Well, I mean, I believe, the market breaks itself down into 3 individual phases. Okay. And I think that applies to any time frame, any chart, any market. It doesn't matter. So if you look at a chart and, again, I do a lot of stuff like when it's busy, I'll trade 4 minutes. I'll trade futures on a 4-minute scale, but I use a secondary time frame. That's what I call my trigger time frame. So I've used 4 minutes to identify the trade, and then the 1 minute will tell me when it's time to get in. But in the meantime, so the first phase of all markets, or the birth of all markets, is consolidation. That's where the market spends, believe it or not, 65% of the time consolidating. So after consolidation, that's always a series of double tops and double bottoms, and it depends how wide it is. I mean, if it's a really wide range, I might goof around inside that range, right? But typically not. But then, as the markets move, it's going to eventually break out to one side or the other. Okay. So if it breaks out, it's going to be making higher highs and higher lows. So I'll be looking to get long on the breakout, but I won't chase it up. I'll look for pullbacks because, if you trade those patterns, double tops, double bottoms, not too many young guys trade them, only the old guys trade those. But if you trade those, they work best in the direction that you want to go. You buy support in a rally and you sell resistance in a sell-off. So the double top in a rally is a 50-50 shot. A double bottom in a rally is a high probability. I mean, it may not be right, but it is a much higher probability. So that's what I'm looking at is, the easiest markets to trade, if you can trade, is with the path of least resistance. It does not mean that you won't trade within that pattern. It depends, like my position. I mean, I've been short crude for since the 60s, but now, everyone, if there's a big push down one day, I might buy into it for the day or for 5 minutes, who knows?
Right. And so would you describe obviously you kind of alluded to the idea that you have both your kind of long-term account and then you have your trading account. How do you manage your active trading? Are you predominantly like trailing stop losses behind a lot of your trades? Like, how do you use some specific technical analysis techniques other than looking for patterns? Like, how do you talk us through how you sort of look at the markets?
I've got different ways I do it, so I just run through them quickly. But my biggest positions are in my algorithmic portfolios. Okay, I've got a number of different size portfolios that actually people subscribe to, but there's no stops. The stop is when you reverse and go the other way. We're in, depending on which portfolio you pick, the biggest one is $226,000, which requires $72,000 cash. We don't require, it's up to them, but we advise that you have 3 times the amount of margin that you need so that when you do suffer a drawdown, you're not going to panic. So that one trades 29 products and either long or short every day of the year. We're never out of the market. I'm always in that portfolio, either long or short. Okay. And it's become really nice with the new advent of the micros. Okay. That has opened up the door to a lot of people that were afraid of futures. Well, now with micros, I mean, hell, they're $5 for a full point move in the S&P is $5. So if you want to get in and learn it and understand it, then you have a chance because now there's no worried about getting soybeans delivered to your backyard. So, but then if I'm trading, if I'm trading my day trading, okay, I'm only trading in my day trading a certain pattern, and that pattern applies to everything. Okay, it doesn't matter. In fact, I trade with some of my members. I trade the jobs number live every Friday. The Friday of the month, I trade live with all my subscribers. Okay, and right now, out of the last 52 months, we made money 48. So,
right. Right, and so let's kind of take it here then and discuss this. If you kind of look now, you've gone through this big journey in your trading career, and if you could go back in time and give yourself advice 30 years ago when you were just starting your career, what would you tell yourself?
I would tell myself to learn better about what's going on in markets, understand the positions better, understand the way the market functions better. I think people would be much better served if they actually understood and didn't get nervous the minute they saw bad news, even if they're on the wrong side of the market. I think one thing and one thing you learn is that there's always time to panic. Okay,
right.
But if you panic, you're stuck. And normally when you panic, you're wrong. So it's easier to wait. Again, if there's a big move going on in the markets overnight, I'll send an email to everybody and say, hey, just sit back and relax. Turn your machine off and come back later, because I don't want you panicking out on the first tick, because at the end of the day, there's a better probability that it'll come back. And in fact, one Sunday night, my partner and I were long a lot of crude oil, all right, going into Sunday night. And the markets got creamed overnight. Okay. Now I knew what he was going to say. We did. Where is it the same thing? But I asked my people all the time, what would you do? What would we do there? And they go, my oil is down. We're already long a lot, and it's getting creamed. And I call him up and says, what do you want to do? He says, buy. I said, okay. And that's what we're going to do. I knew that was going to do anyway. So again, I'm more of a buyer into panic than a seller, and I'm more of a seller into euphoria than a buyer. I don't chase markets up or down. Okay. I want to make sure. But
yeah, so I want to just kind of work on that, because a lot of people always are looking for some sort of an indicator or something like, tell me what's your favorite trade setup. But isn't it funny how sometimes it's just getting a pulse on the animal spirits of investors and the way the market behaves. Sometimes the best trade setups are just because you can feel the emotion that is being triggered, and that you just have to trade the other way. Isn't it funny that that's not an indicator? It's just something that you just, from being a trader, you just pick up on this from just experience, right?
How many indicators do you think I use?
I don't know, like 2.
Close your eyes. What do you see? Nothing.
0.
I don't believe in them. I think that indicators, if you understand and learn how to use them, okay, anything can make money if you know how to use it.
Yeah.
If you're following everybody at the same trade at the same time, how are you going to make money? Remember, this is a competition. Okay. Well, during the trading day, you guys are trading, I'm trading, we're competitors. Okay. So we may not be in the same market. We may be, but we're both trying to do the same thing. Okay. So you have to understand that the business itself is a competition. Okay. So we have to understand that you're against your competitor. So it's like playing poker, because trading is very similar to the 4 mathematical games, which are gin, backgammon, poker, and bridge. Those are 4 games that the better player is going to win over time. They won't win every day, but they will win over time. Just like the market, you won't win every day, and if you think you will, you're in the wrong business, because you got no shot. It doesn't work that way. It'd be nice if it did, but it doesn't. So I think people need to be more disciplined, and you have to make sure that you have your emotions in check, because again, the one of the biggest flaws in every human being, and me included. I'm not saying I've never done it. Any mistake any of your listeners or you guys have made, I guarantee I already made it at least once. Okay.
Right.
It's a hard business. Look, we're not stealing out here. They're not handing out $100 bills on a street corner here.
Right. So listen, Todd, I have to ask you, what's with the Bubba name? What's the origins of Bubba?
Well, I played football in the '60s, right? And how many 6'3" Jewish guys do you know?
I guess not very many, right?
And that was the era of Bubba Smith. Okay. So the name stuck. And when I went down to the trading floor, you have to get a badge, right? You get your acronym.
Right.
So I went for my initials like every other schmuck. And they go, no, I don't have it. So how about Bubba? They said, yeah, I got that. It's done. So I actually owned that name on all 3 floors. One guy offered me $10,000. I told him, no, I'm not selling.
Well, that's a great story. Thanks a lot, Bubba, for sharing everything with us. For those who want to learn more about where they can talk to you and your services, where can they find you?
And they want more stories. They can find me at bubbatrading.com. Okay. I'm totally working to be totally mechanical. We've got some mechanical equity portfolios using options, and we have mechanical futures portfolios, which is what we're really headed to. But I also do teach. I run a couple of webinars a week for my members. And again, you want to reach out or you want to email me, you can email me at bubbatrading.com. But we've been around a long time and we've got a lot of happy members. So and we're also doing a big hedging webinar on the 29th at noon Eastern. So if anybody's interested, just email me at bubbatrading.com and I'll send you the link. But it's on hedging and how you can stay fully invested and leverage your portfolio to the max, especially those guys that are behind in their IRAs or their RSAs. You can really leverage up if you know what you're doing.
Great. Well, thank you very much. It's been a pleasure hearing your stories.
I got more.
Terrific. Thanks again.
Thanks, guys.
All right. Thanks a lot, Todd.
The sponsor of this week's Market Huddle is Koifin. Koifin is a new platform that gives you professional-grade data and tools to analyze stocks and understand macro trends. It's a personal Bloomberg terminal for those who don't have $25,000 a year to spend on a Bloomberg. The best part, it's completely free. Go to koifin.com today. That's KOYFIN.com.
Okay, time for the rest of the show. Lena, hop on.
Hi.
Who is the beer sponsor this week?
So our beer sponsor this week is Kilter Brewing Company's Juicy IPA.
Juicy. I love this.
It's with 2 eyes at the end.
I don't want to say anything about women with names with 2 eyes at the end.
I think I know what you're thinking. We're not going to talk about it.
Okay,
what are we about to get here?
Yeah.
First
of all, where is this from? I have to say, this is actually, I will hop on and tell a little bit of the backstory. This is from my hometown province of Manitoba. And I had a buddy that was kind enough to bring one by. He was on his way to London, England, and he was stopping in Toronto, and he said, we got to get a kind of a Manitoba beer going here. So he brought these by. So why don't you tell us a little bit about the beer, Lena?
It's a soft and juicy New England IPA intensely dry hopped with El Dorado, Enigma, and lupulin-enriched Mosaic. Those are all hops, I'm assuming.
I know.
Right.
So this is what happens. My buddy's a millennial, and this is what happens when you let a millennial pick beers.
It's you can't tell it's a 7% beer. It's actually not bad.
It's not a beer. It's like a fruit drink.
Oh, come on.
It's juicy.
It is juicy. It's not bad. You know what? I'm making fun of it, but it's not bad. I actually really like it.
I was about to say, like, it's a pretty good tasting beer.
It kind of tastes like if you took a grapefruit and a beer and put them together. Okay, let me do
All right,
my
do your legal
stuff.
shit.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much market huddle may include USD hysteria, immobilizing account paralysis, and NASDAQ, I don't know how to say this, priapism.
There you go.
And I encourage everyone to Google priapism.
Okay, I'm gonna do it while you're
PISM. Anyway. Okay, let's get on with the rest of the
All
show.
right.
Okay, Patrick, it's my favorite time. Talking charts. What do you got for us?
All right. Well, listen, first of all, we're going to be using Koifin charts, and we're going to be looking at some of the cool stuff that on Koifin's platform. And really what I wanted to do, in fact, I'm going to kind of give everyone a spoiler because in our top 3, we're going to be talking about all these intermarket relationships and what's going on in the markets. But it's amazing how these different asset classes are all moving in the markets. And first of all, it's worth noting some of the big currency moves we had, particularly the Japanese yen. Right. Do you know what level we hit, Kevin?
Yes, I did lose the bet, folks, and I'm going to have to wear the market.
So we have new listeners.
That's right. So Patrick and I like to engage in occasional wagers. Sometimes we bet burgers. Sometimes we bet steaks. In this case, we actually bet
the single highest stake bet.
That's right. This is basically the whole enchilada. This was the biggest bet that we had going, and I lost. It was that whoever lost this bet would have to wear the Market Huddle menswear, which is basically from a Sears catalog from 1975, and it's shorts and slap up the picture for us.
Yeah, slap up the picture so
everyone can see. And I'm going to have to wear an outfit like that and go drinking with some people.
Oh, it's going to be so great, buddy. I'm so glad you lost.
I know, I lost badly.
Oh, actually the winners should have been the privilege to wear, not the losers.
If you want to trade, I'm happy to trade with you, Patrick.
But listen, what I wanted to do is look at this in a much bigger scale. I'm putting this here on a 10-year chart. But what's fascinating to me is that if you go and look at the last even 20 years, the yen has had extraordinary moves, higher and lower. The volatility has been pronounced, obviously Abenomics and all sorts of other issues on there. And really the last 3 years has been defined in a pretty relative trade range compared to how volatile this yen has been. And I'm asking an important question. Did we see the beginning of a breakout out of this range? Is this the start of something much bigger, or are you just going to fade this, Kev? Come on. I'm setting this up for another bet.
I am fading this. I think it's going to be a prairie dog.
Oh, my God.
And a noble animal. And I think for those who don't know, a prairie dog formation is when something pops its head up and then immediately goes back down. So I think the USD JPY rally, meaning yen weakness, is short-lived, and we will be heading higher in the coming weeks and months.
I don't know if it's the beer, but I just had this little puke in my mouth, kind of kick in at the back. Anyway, well, listen, I won the bet. That's all that matters on this. But what is interesting is that we do have a strong dollar, which is typically a very global defensive thing that's going on. But at the same time, we continue to see material rally in bonds. I'm going to go to the long bond with the TLT ETF on the 20-plus year treasury. But what I want to really illustrate is that right across the board, we have interest rates declining considerably during this period where global growth scare is on because of the coronavirus, right? And another major defensive asset of gold has been kind of struggling along with that.
Struggling.
Struggling.
That's a new word. Is it struggling?
I just made up a word.
It's good. I like it, though. For those who don't know, this is going to be the new thing. Struggling along.
Struggling along. You heard it here first. And so what we're going to do is I just want to pull up this chart on gold, which had a nice breakout to new highs. And so I ask you, Kev, if you're fading the dollar move, you're basically suggesting, I guess, that this entire scare is going to fade. Does that mean that you're fading bonds, you're fading gold, you're fading this whole risk off?
So, Patrick, no, I'm not fading everything. It's not like I'm rushing out and saying that the U.S. dollar is going to go straight down, or that the gold is going to go back down as well. But I do think that the yen is probably the highest risk for a kind of fade, and that's why I'm focusing on that. And one of the things that I'd like to stress is that when the yen started to break out in terms of USD JPY and everyone got excited, that is typically associated with a risk-on move. And a lot of the algos and a lot of the kind of quantitative traders went out and bought stocks. And I warned that for the first time that move was not getting caused because of, let's just say, Japanese selling yen to buy U.S. assets, but it's actually people selling the yen because things are actually really bad there. And one of the things that I kind of focused on was the possibility that maybe that relationship was going to break, and that we could see a situation where all the people that were rushing in, or all the accounts that were rushing into buying risk assets because of the break in the USD JPY might be disappointed. And I wrote this long piece, and one of the things that was really interesting is that Rob from Koifin reached out and he said, although you've done all these charts in Bloomberg, you can actually do those all on my system as well. And Patrick, I can't believe it. I watched his video when he sent it to me, and I thought to myself, why am I paying all this money for my Bloomberg? And so what I would like to do is just kind of walk you guys through how you do that. And so what we do is we go and we pull up the G chart on the USD JPY. And if you wanted to actually see the daily moves, what we do is we add a data series, and then we put rate of change in here. And we click on there, and from there we go and we change it so that it's no longer 12-day, and we change it to 1 day. And all of a sudden we get the same graph that I made on my Bloomberg. And you can see here the daily moves. And what's interesting is that we actually had the third biggest. Actually, it ended up being the second biggest because I think I wrote my piece before it was finished. The second biggest move over the last kind of year or so. Now, one of the things that I would like to stress is that Patrick was talking about how it's so narrow these days. And if we go look back 20 years and we do the same chart, you'll see that this little move that feels so big, it's actually nothing, right?
Not a relative.
There's lots of moves that are much higher. And so I thought this was really interesting and really powerful that you can do all this on Koifin. And so I highly suggest that, if you have any interest in kind of these sorts of analytics, go and have a look because you don't need the expensive Bloomberg to do it.
Yeah, I agree with you, but I disagree with your market analytics. But
do you like the Koifin analytics, but you disagree with my market interpretation?
Yeah, exactly. But with that said, what I thought was really interesting is there's now a lot of people. So just to change the topic a little bit, there's a lot of people that are talking about the byproduct of lower yields, which was that there's been these huge rallies in obviously defensive. So I'm going to let's say look at the util space, which is the utility stocks. Obviously very interest rate sensitive because of their high dividends. And you can see just like they're running like they're growth stocks, even though they're on the upside.
It's nuts, Patrick. Go look at this. Like, pull this up for the past couple of years. Let's zoom back even farther.
5 years.
And so we look at January or December of 2018 when we had that kind of scare.
Yeah.
And you'll see that the XLU was $50.
Yeah, 45, 50, yeah.
Yeah, so it's now gone and rallied almost 50% since then.
That's unbelievable. And these companies aren't growing; they're just buying.
Yeah.
They're just racking up in their debt because at lower and lower interest rates and leveraging it up and paying up their big dividends.
What's amazing to me is the fact that you have kind of bond proxies rallying in that amount.
Oh yeah, but it's not the only one. Let's say you look at XLRE, which is the REITs, right? The real estate investment trusts continuing to rip higher on the upside. Like right now, what's happening is bonds are rallying, and therefore all bond proxies are rallying. And this is actually a feedback mechanism that is, and this is a conversation me and you have all the time, is that long duration growth, growth assets are considered long duration, and therefore they are also net benefactors. And so all of these major growth companies in the technology space that have been doing these face-ripping rallies are to one degree or another derivative of this, right?
Yes, they're also benefiting from the flattening of the yield curve and the fact that we have interest rates going down. Now, this works until it doesn't, Patrick. And that was the whole point of my yen piece, is that I think that we're misinterpreting the data that is getting sent to us by the bond market.
Right. And I'll agree with you. What I personally think is really interesting, Marko Kolanovic put out a piece talking about the fact that he made the call last year and was early. That basically one of the once in a decade opportunities is rotating from this space into value. Momentum
is that what he
into
said?
Value.
It's a once in a.
Well, he was wrong, but he said that like 6 months ago,
okay.
and he got hammered.
So it's another once in a decade.
Yeah, so
opportunity. Because is that not what he's saying?
But right now, what the fact is that the coronavirus has now created a double down on this. So just showing that from a factor analysis, you literally continue to see what we have here on Koifin is showing the factor analysis comparing value to momentum.
Right.
And so again, momentum continues continues to clearly outperform, and value continues to lag. This is and this.
I think lag is being polite. Shit the bed is the correct
and more importantly,
terminology.
more importantly, you have cyclicals and commodities all being hammered. And don't get your periodic table shit going here, but the thing is that at some juncture, what I believe that this coronavirus does is it creates this binary moment where once everything subsides, once the algos pick up that the worst of it is over, the rotation is going to be very violent.
Oh, I agree. And I actually wonder if it started today.
Oh, Jesus.
Yeah, I know. You didn't want to hear that.
You're always early, Kev.
I don't doubt that, and we'll leave all the jokes alone for that. But Patrick, I'm very proud of you saying Marco's last name. That's your Eastern European background. I can't say it.
Oh, my God. Yeah, that's... Anyway. So... The point, though, just getting back to the charts. So we have defensives doing incredibly well. All bond proxies doing very well, and obviously all the MAGA stocks that are the big tech names are doing well. The big story will be when do we see the flip and when do we see the rotation, and that will hammer the index because the momentum stocks are just such a huge.
It started today, Patrick. The MAGA stocks are for sale.
Love
you know
it.
what it was? I'll tell you what
Love
it was. It was the top will be the Economist cover, which this week was basically touting technology stocks.
Really?
It's gonna once again be the cover indicator.
I love it. I love it. I'm not opposed to your idea. My account won't object to your to yours. Anyway, so that's what I wanted to cover. When does that rotation begin? I'm excited to see whether you'll be proven right or not. But that is us talking charts for the day.
All right. So Patrick, what do we got for this week in trading history?
So this week in trading history, I want to go way back.
I know 1500s.
Yeah, we're going back 500 plus years. And to the birth, it was February 24th of the year 1500 that Charles V, the Holy Roman Emperor, it should not empire. That's a typo there. The emperor. It's not so holy and definitely not Roman. But
he's looking good in his tights, though.
He is.
Yeah.
But it's
better than I'm going to look in my shorts.
He was born and he ruled over one of the biggest empires in history, only behind the likes of Genghis Khan. And
Genghis Khan?
Yeah. I don't even know how to pronounce it right.
No, you don't.
And so the point, though, is that he not only ruled over most of Europe, but he, including the domain of Spain, but he laid claim to almost all of the New World of Americas outside of Brazil. And so he ended up being the king that managed to pretty much bankrupt his state. Which is impressive because he had access to all of the gold and silver of the New World, and that's where we're going to go with the story, and including the Renaissance banking fortunes of the Netherlands, all at his disposal. And ultimately, him being crippled with gout and malaria, died at age 58, ended up defaulting on massive amounts of Spanish debts to their creditors. And so this is where I want to go with the story. So he was obviously he ruled over a huge, massive part of the world. But I want to go back to the story of the Money Mountain in Peru, which is modern day Bolivia. And the Spanish conquistador, Francisco Pizarro, and 160 men on their horses captured the last Inca emperor, this Atahualpa, I think is the right pronunciation.
Oh, my God. This is just
the point, though.
a gong show.
Yeah, it's a gong show of names whenever you get me started up with beer. But the point is that trying to buy his freedom, he filled the room he was being held in one time with gold and twice with silver. Of course, that didn't help because Pizarro ended up executing him anyway. But it really built a thirst for precious metals that invigorated the Spanish to explore South America considerably. And it led to this amazing little circumstance. So this Indian named Diego Galupa discovered the 5 great seams of silver in the Money Mountain in 1545 during Charles V's rule. And the Spaniards ultimately enforced a system of forced labor, conscription of all the natives to actually mine these massive silver shafts. And the mortality amongst these miners was horrendous. The new Silver City Rush was named the mouth of hell. It was said that every silver peso coin minted had cost the lives of 10 Indians. It was nuts, but it was such a huge project that the city of Potosi had a population of almost 200,000 people, which is larger than most European cities at the time. This was a huge Spanish endeavor and incredibly important to Charles V and his building of his empire. But all of this silver could not tame the rebellious Dutch or secure England for him. And ultimately, like King Midas, Charles V found an abundance of gold and silver could be a curse as much as a blessing. So they dug up so much silver to pay for their wars of conquest that the metal itself dramatically declined in its value. That is to say, the purchasing power with respect to other goods. That word inflation, right, Kev? I knew we were going to trigger you here. Basically,
Trigger alert.
Trigger alert. Kev's been triggered. I said the word inflation. And ultimately, during the so-called price revolution that affected Europe from 1540 to 1640, the cost of food, which showed no inflation for 300 years before, suddenly rose remarkably. So in England, there was some of the best data records kept for that, but the cost of living increased by a factor of 7 over 100 years.
That doesn't sound that bad.
Well, the point is it was revolutionary for that time for amongst the peasants and stuff. The point is the silver acted like a resource curse for the Spanish, basically removing incentives for more productive economic activity, and at the same time strengthening their rent-seeking autocrats at the expense of the people. Ultimately, the Spaniards failed to understand that the value of the precious metal was not absolute, and that money was only worth what someone is willing to give you for it.
Oh.
Right? Like this is...
Patrick, this is you trying to be like all wise and
yes.
And,
so the point, though, is that the money supply did not make the society richer. Finding all that silver didn't make the society richer, though it did enrich the government and monopolize the production of that money.
Oh, God.
Are we getting a little MMT here?
Oh, God. I don't know.
Monetary expansion was really monetary dilution and a hidden transfer of wealth.
So you basically been saving this story because you want to just like put some jabs into me, right?
Well, listen, I mean, I think this is a great lesson in history.
Oh, yeah. You know what's better is let's just try to deflate our way to prosperity as well. Actually, Patrick, I want to say one thing. I didn't understand the word conquistador.
Yeah.
I didn't actually know what that was. So I Googled it while you were chatting.
Uh-oh.
Do you know what it is?
It's like those people that go conquering, right?
Yeah, well, first of all, I thought it was just a Procol Harum song. Because it's like one of their better, actually underrated band. You know, Whiter Shade of Pale is what everyone knows, but Conquistador is a terrific song. It's actually, listen to this. It's from the Spanish or Portuguese word for conqueror, which you're correct, but they were the knights, soldiers, and explorers of the Spanish Empire and the Portuguese Empire. During the Age of Discovery, conquistadors sailed beyond Europe to the Americas, Oceania, Africa, and Asia, conquering territory and opening trade routes. Yeah. They colonized much of the world for Spain and Portugal in the 16th, 17th, and 18th centuries.
Yeah.
I had no idea.
Yeah.
Patrick, you're just like a wealth of information for me. I learned all this crap.
Silver,
I have to listen to your
mountain.
I have to listen to all your crap about diluting the money supply and stuff. But otherwise, I still enjoy it.
Well, it's important to learn from history, and clearly you have not. But we're working on educating. Just kidding. All right. Anyway, time to move on. So, Kev, it's time for the WTF clip of the week.
Okay, so Patrick, I've been finding myself doing all sorts of CNBC clips lately, and I figured I can't do another one with Joe Kernan. So I went on to Fox. Yeah. So I went into Fox Business News, which I had no idea about. Like, I hadn't been on in a long time. Have you ever, actually watched the show?
No.
It's crazy. It's nuts.
Really?
They are, Patrick, they make you look like you're left of you're almost a communist, how far right they are. And anyway, so I kind of stumbled upon Stephen Moore, which was one of Trump's kind of Fed governor nominations that he had to kind of pull back on because the reality is he's a nut job. And I stumbled upon him and a bunch of other kind of weird white people talking about why poor people are wrong. And anyways, I saw this, and Stephen Moore is all trying to make it so, there's tax breaks, so there's no taxes on buying stocks. Of course, he would be doing this at the top.
Let's watch it, and then we'll comment on it.
Okay, let's watch it.
Well, as we await details from the White House on Tax Cuts 2.0, Steve Moore suggests a tax cut plan designed specifically for the middle class. Tax-free investment accounts. Laying out the details in a Wall Street Journal op-ed last night. The plan would dramatically increase wealth and security for average Americans while reducing dependence on government entitlements. Steve Moore, sounds too good to be true. Explain it for us.
So, look, I think one of the major themes that I'd like to see Donald Trump and sort of all Republicans embrace is this idea of a kind of worker capitalism where we have every single worker in America engaged and invested in the stock market so that when American companies from Apple to Walmart do better, every worker does better. So the idea here is very simple. Let people put money tax-free into an index fund account.
Yeah, you need any help. Seriously, any help, any advice. Just, don't fucking bother, okay?
I stop with that, Steve. Let's go all the way and have a flat tax and really get the economy
I knew you'd say that.
rocketing, really get it going. And the challenge is going to be in terms of people who don't pay income tax. How do you get the money into their accounts?
Where are you sitting, man? In the basement? Out by the dumpsters? Maybe you'd want to trade? Maybe you'll meet a wealthy widow and you can seduce her with your sad eyes.
Relieve some of the pressure on the entitlements programs, which I think we can all agree are not sufficient to keep people in decent shape for 20 or 30 years, which is now the case. Then we do need entitlement reform. We need to raise the retirement age on people, let's say, under 40 years of age or 45 years of age. But also, we do have to encourage savings. People used to feel it was their obligation to save for a rainy day, save for the future, save for their kids' education. That we no longer have that ethic in this country.
It's nice to have a hobby.
I got a hobby. Hey, killing hobos isn't a hobby.
One good thing Steve Moore's idea does is that people realize their retirement benefits come from their labor, their work, their sweat, not Washington politicians.
Right. I'm driving my grandpa down for Thanksgiving.
Oh, Greg, fuck your grandpa.
Okay, you're on speakerphone, Tom.
Well, I shouldn't be, Greg.
The question I would have is, I know you say put it into equities. What would be great if we had some sort of annuity that had a little more than 0% because we're such in a low-rate environment. But we used to put our 401ks back, 15, 20 years ago, and we had an option for a 10% annuity. And think about that compounding.
You're a moron.
Bar on the floor? I'm just saying.
Fuck you. I am not a moron, Dad.
How much is a gallon of milk?
What?
How much is a gallon of milk?
I don't know. I mean, who the fuck knows, Dad? Literally, no one knows. Who gives a shit?
Ray! How much is a gallon of milk?
Well, I mean, like regular milk or?
I am surrounded by snakes and fucking morons! You're a bunch of silk-stocking fucks!
So, Patrick, you probably don't even know Succession, right?
No.
No, because Patrick doesn't watch TV. But Succession is an HBO show about this family that is extremely wealthy. And usually when you watch a show, there's somebody you root for. Like, there's somebody you like. This show has absolutely zero redeeming characters. Zero. Every time you think, oh, I might like that guy, he turns out to be an asshole. Like, it's just, there's no, like, this show is so screwed up. And it's, like, it's awesome. Don't get me wrong. I love it. But it's just, like, everything terrible about rich families is here, okay? So when I saw these guys on Fox, all I could think about was...
What's the price of milk?
They don't know. They don't know. And they're like, don't be an asshole. Why are you asking me that? Like, you know, you got to watch the show, though. It's a terrific show. I know some people have had trouble with it. They've told me they've tried a couple and they didn't like it. Stick through it. Like, don't just give up after the first or second episode. And in fact, the second season is, like, way better than the first. So there you go. Succession, Fox Business News, nothing.
It's a perfect mix.
Perfect mix.
All right. So let's get to the top 3 things to watch next week. But before we do, what we need to do is we're going to just do a very fast summary of what we covered last week.
Let's do it.
So the first thing we talked about was Treasury bonds and gold. Are they really breaking out? And the answer is yes. That
without
was a real
doubt.
break. And it's not going to stop yet.
There you go.
You know, I know you're an eager beaver to.
No, I'm not fading either one of those. And in fact,
all right.
I don't want to goocher it and tell you that I am not short bonds, which to me is like hugely long. Like that's about as long as I get.
It's just not to be short.
Yeah.
All right, there you go. But so there was multiple FOMC speakers.
That ended up not being as important as we thought, or as I thought. Like, let's
clearly we thought something was going to be important.
Listen,
really
the reality is that you're right. They didn't say anything new and stuff like that. But number one ended up being huge, and I was the one who picked number one, so I'm going to take credit for this.
Yeah.
European and U.S. PMIs. Forget about European, but U.S. PMIs today shit the bed. Like, it's not even close. PMIs came in under 50, which means it's contractionary.
Yeah.
And one of the things you have to understand is that PMIs are actually some of the fastest indicators in terms of giving you feedback on the economy. And what's clear now is that the economy is slowing way quicker than anyone anticipated.
Yeah.
I see that Larry Kudlow, Trump's economic advisor, I don't know what he does. But anyways, he was on CNBC trying to talk up the Atlanta Fed GDP Now indicator. And if there's ever a garbage indicator, this is it. Like, this thing is just like this thing is the most useless.
It comes from Atlanta.
Yeah, well, no, it's not that. Listen, we like Atlanta. Like, you go
Hotlanta.
You go to the aquarium, you go to the Coke store or the Coke kind of museum, and then there's nothing else to do. But anyways, this is a terrible indicator. People use it, and every time anyone uses it, I just kind of laugh. But the point is that today's rally in the bonds, really, like, the breakout was created by this PMI number. And that's the thing you need to know. It was the one thing to watch.
And we were right. And you were right to choose it. Thank you, Kevin.
Yeah, so let's look at next week.
So this was overlapping what we talked about during Talking Charts. And one of the interesting things to me is that from the inner markets, you're seeing all of the things that you would traditionally see on an equity breakdown. And the equities are not breaking down. Now, you could argue because there's this big options expiry that you had this gamma pin. And so one of the things that's going to be really interesting, now that kind of a liquidity pin is gone, the question here in my mind is do equities next week start to react to the way that these inner markets have been moving? Are we finally going to see the beginning of some sort of a meaningful reversion of, or I don't want to use the word like crash or something, but like the markets have been running for the first part of the year and they're overdue for a throwback, right?
Yeah. So, Patrick, I think it's a great one to put in our top 3 things to watch next week. And one of the people that articulated this kind of phenomena, what's happening lately, the best, is my buddy Alex Gurevich. And I kind of use that kind of facetiously.
Gurevich.
Alex is usually on the other side of my trades because that guy loves bonds. Like, he loves bonds.
He's been right. Sorry. He's been right.
He's been right, for sure. And I love Alex in that he's very
By the way, because he was right, that means that you've been wrong.
Oh, I guess you're right, Patrick.
Anyway,
Thanks
sorry.
for pointing
Just
that
pointing
out.
that.
But he wrote this thing, and I retweeted this because it was brilliant. He said, for the last few weeks, we've been experiencing a risk-off environment in every aspect of financial markets except risky assets. And what does that mean? We've seen bonds go up. We've seen copper, crude go down. We've seen all sorts of things happen like that. And yet stocks have been impervious and just continue to hang in there. And whether this is the start of them finally waking up is something that you need to watch for next week.
Yeah.
My bet is it is.
You know what? And I think that I don't want to get into a big thing, but like it's become a lot of the people that have been buying the upside of the stock market have been doing so as renters, and a lot of option strategies have been one of the ways that a lot of traders have gotten upside equity exposure because they really don't want to commit to being long term. They just it's it's career risk. It's like they need to be long the market, and so how do I get long the market in some way and participate? So I think that there's reluctant bulls, which is they're long only because it's been working and they have to be in, and so as we get into option expiration, a lot of this gamma rolls off. It's going to be really interesting to see whether or not we're going to see finally a risk-off moment start to kick in.
And Patrick, one of the things is that as the U.S. dollar has rallied, it's forced more and more people into U.S. stock markets.
Yeah.
And so everyone's been rushing from all around the world into the U.S. And I see that a lot of the kind of milkshake disciples out there are all over this trade. They're just
Brett,
like,
that was you, buddy.
Yeah. And listen, it's been right, but I contend that the rise in the U.S. dollar will eventually sow the seeds of the decline in the stock market.
All right, you heard it here from Kevin.
Okay, number two.
So
what do you got?
Number two. So I wanted to just touch on these semiconductors, right? And one of the things that I've always identified with semiconductors is they are more than most sectors within the markets. They have a very boom bust tendency, and the volatility in the semiconductor space is incredibly pronounced. And semiconductors have really been a strong performer. And they have run and like I'm looking at the SMH was the ETF for it. But I mean, if you let's say look at an AMD, which is Advanced Micro Devices, you can see here
it's been the poster child of this last rally.
It's been a huge run, right? Like I mean, this thing went from $27 to $59. It's a double in like 5 months.
I don't know, but that looks like a bearish engulfing
stop it.
Swan
no,
or whatever.
Don't even try to pull your technical shit out. The point though,
I don't know, but a lot of the red in that.
Yeah, you just see red.
That
means something in your technical world, Patrick. So the point though is that the semiconductors. I'm watching this because they are far more volatile, and I think that if truly we're going risk off, semis will sell. Is my call on that. And so watching what they do next week is one of our top 3 things. So number one, though, we have to still talk about this coronavirus.
Yeah,
right?
Patrick, I completely agree. It's the number one thing. And the question is it expanded throughout the rest of the world?
It's huge, because all of the algos were trying to pick up news that were trying to identify whether shit in China has crested. Like, what have we seen the exponential rise kind of peak out? Are we seeing the turn? It's one of those things that everyone was watching. But if new epicenters are sprouting all over the world, and this thing is only beginning to slow global growth, the thing is that this could be a drag for many months if it's leaving China.
I completely agree, Patrick. The market.
You did in a couple of weeks ago, but anyway.
No, okay, but listen.
But
who's writing the short sell tickets at better prices? Me or the guys that were panicking 2 weeks ago?
Fair enough,
right? Like we've gone up. I contend that one of the things is that you have to sit there and watch the information. And yes, we got a wave of kind of monetary stimulus that's pushed it higher, but now we're in a situation where that's already priced in. Like, we've gotten all the good news, and my question to you is, how much more can they push it up before the reality of the situation kind of kicks in, right?
Right.
And Patrick, I'm scared about the supply chain. I think that we're underestimating the problem.
This is why the semiconductors are up there, because the world in that space, like, Apple's warning was an example of that. But like, they're all interconnected. One supplies another. And this global supply chain, it's on this idea that it can run seamlessly. I mean, if we have a scenario where, what if one area shut down, but then as it starts running, there's a second area where it was supposed to be supplying gets shut down, right? Like, there's you don't know how, like, this coronavirus can interrupt the supply chain, and don't even want to speculate, but we have to watch it. That's got to be the number one thing to watch next week.
For sure. I 100% agree with you, Patrick. I think that the market has underestimated the problems of half of Asia being shut down.
Right. Anyway, so that is the top things to watch next week. So, parting words of wisdom, Kevin. Give us some wisdom, buddy.
Okay, if you learn to whisper to your portfolio.
Oh, sorry. Try it again, because you're drunk.
Yeah. If you learn to listen to your portfolio when it whispers, you won't have to hear it when it screams.
Mm-hmm. It's so true.
By Mark, I don't know how to say that.
You know what? I'll tell you.
For it. Tell me how to say that last name.
You saw me during history. I don't know how to pronounce names. You
Mark
Minervernity.
There you go. Lena, hop on and tell us how to say that last name.
Oh, yeah, now you're going to put her.
I don't know.
Come on, Lena, do it.
Oh, my God.
Just do it, Lena.
We're so bad. Don't even try.
No, 1 second. Lena will do it.
I think it's Minervini.
Oh, well, there you go.
Oh,
look, she's good. Lena, thank you for
the way it's written.
Thanks a lot. Exactly.
What, the way it's written?
If you learn to listen to your portfolio when it whispers, you won't have to hear it when it screams. Thanks, Lena.
So,
okay.
But listen, I wanted to just point out, though, that because I want to talk about this, because this is true. The notorious thing we as retail investors do is when things start going down, we shut off our computers and walk away. And the thing is that the people that are very good at trading and investing don't do that. They actually take actions to reduce exposure. They basically put some sort of risk management in place. And the retail investor that basically closes their eyes, like it's that ostrich in the sand, like just stick your head in. They're the ones that in the end put themselves in harm's way. And what I think there's this one really smart guy that I know that I think his name is ends with Kevin Muir or some kind of guy. But he once said that you trade when you're uncomfortable with your position, you sell it down to the point where you can sleep. Right.
For sure. If you're having trouble sleeping, if you're worried about it, sell it.
Sell it down to the point that you
have it, and then have it again. Keep having it until you're sleeping.
Yeah, and you
now. Having said that, this is the same guy that when he was on the institutional desk and long-term capital hit, when there was no bid and our gamble was kicking in, we decided to turn off our computers because we thought. Either there's no point selling it down here. There's no bids.
That's what Todd was talking about when those really crazy moments hit. It's kind of like the Cuban Missile Crisis. Like there's a point where it's great wisdom until you get to the FU moment where it's like you just have to fade it. Anyway, so let's get some closure here.
Okay, well, thanks for joining us for another week. We appreciate you taking your time and hope to see you again next week. Before we leave you, a big thank you to Bubba Horwitz and our sponsor, Koifin Financial. Just a reminder that the Market Huddle is available on iTunes, Android Play, Podbean, Spotify, and YouTube. If you're watching this on YouTube, and by the way, Lena's making me say all this. If you're watching this on YouTube, please give us a thumbs up and subscribe. Actually, Lena will be really happy if you do that. You can also follow us on Twitter at The Market Huddle for our updates on our latest episodes. That's it, folks. I'm Kevin Muir.
And I'm Patrick Ceresna. Have a great weekend, everyone. You know what, Lena? I think that Kevin's going to give this beer an actually high rating because I saw him.
Oh, it's his hometown beer.
The beer. I saw him chugging.
Better as I went along.
He put his head back and he's like gulp, gulp, gulp. Like
you
he was out of beer,
like
though. 15, 20 minutes ago.
This is the strangest beer I've ever experienced because it started off like it literally tasted like a grapefruit, and I was
and
like,
ended like a grapefruit.
No, actually it didn't. It actually tasted great at the end. This is listen. This is going to be the highest rated fruity beer I've ever given.
Okay.
Whoa.
I'm giving it a solid 8.2.
Whoa.
Yeah. And it's not just because it's from my hometown. Whatever they've done, there's just magic.
I saw you
in
chugging
this.
it. I believe you.
There's just magic in
8-2.
this.
There you go.
It just is. I don't know. It's magic. What do you think, Lena?
I liked it. I liked that it wasn't as hoppy as I thought it would be. Usually IPAs, I feel like they give you a really hoppy aftertaste that kind of lingers. This one didn't. It was very clean finish, I think. I would give it an 8.6.
Oh my God.
Yeah, I would drink this. It's strong beer and it tastes great. It doesn't taste like a strong
All right.
beer.
Well, you know what? I enjoyed it.
You gotta give it an 8 handle.
No, listen.
You gotta give it an 8 handle. Otherwise, you're gonna get kicked off the show.
All right. So, it's what I enjoyed.
Peer
For
pressure.
7%, I didn't feel like I was drinking any. Like, I didn't taste the alcohol.
No, you're right. It didn't feel like it didn't taste like a 7.
It didn't.
Sometimes
taste,
we open the 7 and it feels like you're drinking scotch.
Yes, it's heavy on that, and this did not have it. So I actually really enjoyed that element of the beer. It actually tastes very good. I enjoyed it, but I don't want to take your thunder away. So I'm gonna give it a 7.9. Yes, and I only said that because you said you have to give it an 8. I was gonna give it an 8, but now because you put pressure on me, I intentionally give it 7.9.
Yeah, I should have gone the other way.
Yeah,
I should have done the reverse psychology.
Why can't you give it same score?
No, just saying he can't give it an 8 because I said
because he said I got to give it an 8 or he's gonna get kicked off the show. So I just wanted to see if I really get
see
kicked
if
out
it
of the
get
show.
Kicked off the show.
It's.
I'm gonna
I like
replace
it.
you next week. That's what's happening.
That's true.
No, but listen, it is a good beer. If anyone can pick one of these up, it's actually not bad.
Yeah, most people won't be able to pick it up. It's gonna be. Amazing.
You're gonna have to go to Winnipeg to pick it up.
Yeah, which is not worth it.
Kilter. The Kilter Juicy.
It could be the greatest beer. No.
Hoppy, tropical, and juicy.
Anyways, thank you to our sponsor that brought that by. I really appreciate it. You know who you are.
It was great. And the can gets thrown in the bin.
Okay, well that's it.
I'm going for a poker game tonight.
Are you really?
Yeah. I'm heading actually across the street to the Walrus here first for a couple pints, and then we're going to drop some cards with the boys.
What are you guys playing?
Just Texas Hold'em.
I don't play poker. So.
How much is buy-in?
We usually
coming up big. Sounds like she knows what she's doing.
Oh, we just keep it friendly, like $20 or something like that. But you know, it's a boys' night out.
How many people?
We usually get anywhere between 6 to 8. I have a buddy that's organizing it.
Where are you doing it? Like someone's basement?
Yeah, someone's house. Yeah, and then we're gonna go out afterwards. But
because you figure that's not enough drinking and
yeah.
What do you? You know what? What we have a rule, right? Like is that the person
if you can still walk, you can still drink.
The poker game has to go and buy everyone else around the drinks at the bar.
So you don't really win.
So you don't really. Well, you're just paying for everyone else's drinks.
Yeah.
If anything, you might be losing more.
That's called Friday night poker.
We have things like that on the trading desk where we all gamble on something, and then whoever wins basically just buys everyone lunch. So it's like everyone's paying for lunch.
Yeah, it's a communal thing. It's more pride than anything else, right?
So are you a big poker player?
Okay, I'm a big poker player, but don't ask me if I'm a good poker player.
I don't play. Like I'm not a big.
I understand the math of poker, but my tells are the worst.
Oh, really?
People fucking read my tells like anything. They just know when I'm bluffing.
I could never see that.
I'm sure it's worse after a few beers too,
you know,
right?
Actually, Lena, I could completely call that in like a Patrick, he just looks like that kind of guy.
Like looking at my cards at the wrong time, and
you don't have a poker
smile
face?
on my face or the wink in the eye, like I can't hide it. I wear my emotions.
So I've never played. I don't play. Like I'm a bridge guy.
You've never played poker?
No, I've never really not seriously, not like these guys do. And I remember one of my hedge fund buddies said, "Oh, you want to come? We're having a big poker night." And I'm like, looking at the list of people there, they're all rich and they all do this like all the time. And I'm like, I am not going to start with you guys if I'm going to play. This is like, it's just like a disaster.
You're just like, You know, you're the victim.
Exactly. I'm just like, I am not coming there and doing that. I actually love cards. I love bridge and other things, but poker just never kind of tweaked my interest. Like I just never got into it. I guess I'm a little too old for it because it really was that next generation that did all the poker online.
Yeah.
Oh, you're never too old to play poker.
Oh, Lena sounds like she's a real fan.
Do you play, Lena?
Oh, no, not really. I've played with friends and stuff. I'm not a good poker player, but I understand the basics and whatnot. But when I started
Lena,
playing,
let's put it this way: do you watch poker on TV?
I watched the master class for what's his name, Negreanu, the poker player. He had a master class on there. I watched it.
Oh, the master class! I know that thing. Yeah.
He got
For those
me
who don't know, Masterclass is this kind of website that basically has a quote-unquote master of each kind of subject to teach it.
Yeah.
So, Lena, basically you're faking it because you watched one master's class.
No. I've played poker with like friends, weekends here and there.
I'll tell you.
Buy-in.
Okay, so I've probably played a better part of, like in the last decade, maybe 50, 60 poker games of just buddies getting together. And for some reason, whenever someone brand new comes to the table, it doesn't matter their skill level, they have an ability to win because you can't read them.
Yeah, exactly.
Yeah, what happens is that when you get to know each other, you know how to play each other. You get a feel for who your buddies are and how they play, and you get a rhythm. And then some person comes in, and especially when they don't know the rules, they make weird bets, and they're not sizing right. Yeah, they do. And it's funny is that they get lucky, and what happens is that we've had so many scenarios where new guys come in and they clean us out. And it's like, what the fuck?
So maybe
I've done that a couple of times with our friends.
Really? Yeah. But maybe these quote-unquote new guys aren't as new as we think they are.
Yeah, that's why Lena's
Patrick's falling for this.
We should have a Market Huddle poker game.
So Patrick, quote, wink, wink, I've never played before.
Listen, let's get a bunch of our listeners. And
how do you know this isn't the part of the master plan, Patrick?
Well, maybe, but I'm curious. We should get a Market Huddle poker game going.
Okay, so I got one story to tell you.
All right, listen. For our listeners, if you got this far and you are able to make it to Toronto for a poker game, you let us know. If we can get a table of 6 to 8 people, we're gonna get a poker game.
You know that's gonna happen, and I'm not playing. So you're gonna.
You're gonna.
I'm gonna drink beer and watch you guys.
What do you mean? $20? You can fucking drop 20. Don't give me this bullshit.
No, but you got it. You know it's gonna come for $20.
I'll cover your $20.
Is that like
Kevin can run the game like Molly's game, but it'll be Kevin's game.
Yeah, nice. I'm Molly. Like what her name is. Okay, so Patrick, I got a funny story to tell you. When you heard Bubba talking about how he put himself through his first 6-9 months of playing backgammon and gin.
Oh yeah, okay.
It wasn't bridge. It wasn't a real game. It was gin. Anyways, I thought that was hilarious because when I was on the trading desk, we were trying to hire someone new, and I met this fellow somehow that sent his resume, and he was this dude that came from a kind of a humble background, and he couldn't afford university, but he was putting himself through university hustling chess. Seriously,
wow.
He would go, and there was like these chess like boards down in like Queen Street, and he would go there after school and hustle chess.
Wow.
And I was like, I said to my boss,
impressive.
I said we gotta hire this guy. I was like, this is our guy. This is like he's smart enough to hustle. He's smart enough to be good enough at all these other guys at chess. Like this is our guy, and I got completely voted down. But I still I wonder what happened to him because I loved him. He was my kind of guy. I don't even know if he had finished university. I was like, we gotta hire this guy.
Yeah.
So that is my kind of guy. So the guy that puts himself through school hustling chess. So I look kind of like Bubba, how he said, I put myself, I paid for my first couple of 9 months, trading gin and or not trading, playing gin and
backgammon.
Backgammon.
Yeah.
Backgammon is actually a tough game to play. There's a lot of numbers and stuff. He must be good at numbers. It's not like he's playing fools. Like he's playing other traders.
Yeah.
Traders are generally pretty good at this kind of shit. Like it's not the kind of guys you want to play.
Yeah.
So the fact that he was winning against these people is pretty damn impressive. I actually, that was my favorite part of the interview.
There you go. That was a good story.
Okay.
All right. Let's
we'll let everybody
call
go.
him.
Thank you very much. Make sure you do whatever Lena told me to do there. What was it again, Lena? Let me just say it one
Give
last
us a
time.
thumbs up. Give us a
Thumbs
like.
up and subscribe on
That's right.
YouTube.
And also, if you're this far and you're not subscribed to our email, make sure you hit the Market Huddle website and get our weekly email. It gives you all of the great stuff that we send every week.
Anyone that's this far is on that list. Let's face it. We were supposed to put that at the beginning when the non. Okay.
We'll
On
try
that
again
note,
next week.
Have a great weekend, everybody.
All right.